Hey, what's going on, everybody? Today I am going to focus on showing you the differences between the time frames. This is why I have the chart chocked up full of indicators. I'm going to show you that there is a difference between each and every one of these indicators that you see on the chart. Even down here, this MACD, it's totally different if you're looking at a different time frame, and you need to understand that. Everything from the MAs to the cloud is all configured through the candles, okay, in one way, shape, or form. And with that in mind, each of these candles are different. This is a 1 day chart. So this is a 24-hour long candle. That means this candle started here and 24 hours later, that's where it closed. The wicks show the extent of the climbs or the dip, but ultimately it closes where the big chunk of the where the bigger part opens and closes. The green candle opens lower and closes higher, while the red candle's opposite. It opens higher and closes lower. But the whole thing about it is when you go to the 4 hour, everything is totally different. For instance, let me show you something just so you believe me when I tell you this, because I'm gonna just draw a rough representation right here. Say that's a 50 MA, and we're gonna know the difference when we get there, even though they're both gonna be white. I can actually make this one a different color. You know what? Forget it. Just leave them both white, okay? So now let's go to the 4 hour that I was talking about, and we have those two white lines on the chart. Remember? All right, so what is this? This is that first white line I drew, okay? You see how it transferred over to the 4 hour. So whenever you draw lines like that, it can be helpful, guys. I do it all the time. Whenever I want to have the 4 hour and the daily info all in the same chart, I don't care if nobody else can understand it. I understand it. So you can see right now that we bounced off of that 50 MA already once. Now we're flirting with this 4 hour 200 MA, but this down here, this shows you this is the daily 50 MA, remember, the one that's higher. This is the daily 200 MA. This is the 4 hour 50 MA. So its counterpart on the daily would be right here. So you can see they're totally different. This one's descending. This one's still ascending. This one's still ascending, and so is this one. The 200 is a lot bigger. It's why it's below it right now, because it's still catching the effect of the pump. You know what I mean? A 200-day moving average takes more to move, and that's why I'm bringing this up right now. Is that this people have been saying, well, the MA told me this, and I'm like, well, which time frame are you looking at? And then I'm discovering people don't even realize that these are totally different on this time frame versus another time frame. Same with the cloud. Let's go ahead and you know what I'm gonna do? I'm gonna draw the ugliest representation of the cloud you've ever seen. Okay. Oh man. Now this isn't perfect, guys. I'm just doing this. I've done it before. Ernie and one of my buddies has showed me how to do it without this, but I took my premium account down because I was upset with trading views. So, long story short, I don't get all the perks anymore. So, there's my representation of the 4 hour cloud. Let's say I want that on the daily time frame. You could do the same thing we just did, except go to the daily, and I will show you the difference. Look, there's your 4 hour cloud right there. Okay, it may not be very significant. You may not need it on the daily very much, and you can see how ugly of a job I did. But look how different it is compared to this cloud. So I want you guys all to understand and grasp that. Look at this, the MACD down here. The blue is below the red. That's bearish. Okay, when the blue was above the red, look, we were climbing that whole time. So that was bullish time. Once we crossed back under it, it's been bearish ever since. And that compared to this, Okay, so where blue is below the red on the daily. Let's see where it is on the 4 hour. The blue is slightly above the red. So it's bullish on the 4 hour, but it's not quite bullish on the daily. And that's all stuff you need to know, guys. On the weekly, it's different. On the 1 minute, it's different. It's all going to be different. Your MACD, your RSI, everything is going to be different on every time frame. Your this Bollinger Bands, the only thing that's going to be the same is volume, perhaps, but it will be spread out because each of these candles on a 1 hour is only worth 1 hour of time. When on a daily, it's a 24 hours. So you're going to see that 24 hours spread across 24 volume candles on a 1 hour time frame. You know what I mean? It's just one of those things, guys, where you have to understand all of that, and you see how cool it is when you when you draw the daily 50 MA onto the chart, and then you switch back to the 4 hour. It helps because then you, even though this wasn't the prettiest drawing, you could still see how it showed up as support right there. And it could act as support again as soon as tomorrow because it looks like we're below 200 MA, and that is not a good thing. Okay, I'm just gonna say it straight up. But anyways, I mean it's not a good thing if you're a bull. But anyways, I just wanted to go over that with you guys. Understand that. Cycle through the time frames. Major time frames are important. You want to know what time frames I consider major? The 1 hour, oh, let me go in order. I think the daily is the most significant. Okay, everybody looks at the daily. When you open up TradingView for the first time, it brings you to a 24-hour chart, and there's a reason for that. It's because it's the most looked at chart, in my opinion. More traders go off of that. The moves off of the daily. If you see a head and shoulders on the daily, it's going to be a bigger move versus a head and shoulders on the 1 hour. You know what I mean? And that's the way trading works. It's because more traders focus on the daily. And so the daily is the most significant. My favorite is the 4 hour, and I would put that second. 4 hour is nice and fast, fast enough for me. It's not fast enough for some traders. Some traders are quick trades, 15-minute charts, 15-minute candles, 5-minute candles, 1-minute candles. They even have 1 second candles. So you have to keep all that in mind, guys. You know, some traders are different than others. I'm more of a laid back trader who likes to get his kicks and enjoy his life at the same time. So there's a time and a place for quick pace trading. You know what I mean? I've done it before, but I just find being patient gives me just as much profit. You know, I end up losing half the trades no matter what I do. It seems like so. My strategy is to minimize my loss while maximizing the gains, and that has really been a good strategy for me. And I hope that I can instill that into all of you. At the very least, you can make you can make a net profit instead of losing money and knee jerk sells. But this vote video was just to show you guys that there is a difference between these MAs. The MA 50 MA on the 4 hour is up here. Okay, the MA is a representation of the moving average, which means it's a representation of the last 50 candles. Okay, so if you count 1, 2, 3, 4, 5, 6, 7, 8, 9, 50, okay, all of these 50 candles, this is going to be represented at this time. You know what I mean? At this point. So the average of the last 50 candles is right there at, let's say, around 34,330, which means the average is actually higher than the current price, and that's bearish. When we're below the 50 MA, it's bearish. When we're below the 200 MA, it's bearish. When we're below the cloud, it's bearish. That's why I like using these indicators. We're not necessarily below them on the daily, though, yet, are we? Because the daily cloud is down here still. So, I mean, it's right here, actually. So we're actually above the cloud on some time frame. So like when they say when in doubt zoom out, that's what they mean is look at other time frames, the major ones, use the weekly even. The weekly's pretty important too. So I'd say the daily, 4 hour, 1 hour, weekly, 15-minute, and 30-minute after that, I guess. You know, the 15-minute I've fallen to quite a bit whenever I'm in a jam. And like, let's say we're going straight up like we were the other day, you know, a month ago or whatever, we were zooming up the chart. I had to change to the 15-minute just to get a gauge of where support might be because there was no indication of that on the 4 hour, the 1 day, because all we had were a bunch of straight up candles. So it shows you cycling time frames is important. And if you don't cycle time frames, you'll never realize that this 50 MA is acting as support right now. So that's why the daily is important to keep an eye on. And even though I haven't been giving it much attention over the past few months, it's because my trading setup, like the cloud, the 50 MA, and the 200 MA, have all been way below the candles, and it hasn't been really helpful in that sense. But now that we're catching up to my 50 MA already, so I'm starting to put the daily more into my repertoire again. But anyways, I'm gonna end the video here, guys. It's just to show you guys, be aware of what's going on. Make sure you cycle through time frames and realize that not everything is, not just because you see the 50 MA at this point on the 4 hour, the daily is going to be totally different, guys. So you have to be hyper aware when you're a trader. You know what I mean? And that's what this point of this video was about. So I hope you learned something.